Architecture firms consistently lose between 12 and 18% of their potential annual revenue. That leakage rarely comes from unbilled design time. It comes from unbilled or underbilled consultant costs, specifically the invoices from mechanical, electrical, plumbing, and structural engineers. Consider a standard scenario. An MEP engineering firm sends a $12,500 invoice for schematic design work on an active project, like the Riverside office building. A project manager forwards that email to the accounting department. Someone then spends 20 to 30 minutes manually typing the vendor details, invoice numbers, and amounts into their accounting software. The bill gets paid. But 6 months later, during a project closeout review, the firm realizes that the $12,500 cost was either completely forgotten and never rebilled to the client, or it was passed through exactly at cost. This chart shows the financial impact of that mistake. By failing to apply the standard 10% consultant coordination markup to that single invoice, the firm effectively erases $1,250 in pure profit. When multiplied across dozens of consultants and hundreds of invoices a year, manual invoice tracking directly cannibalizes a firm's net profit margin. Fixing this requires a two-part solution. First, we need to configure the strict parameters inside the accounting environment, and then we will build an automated AI pipeline to handle the data extraction. Inside QuickBooks Online, we start by navigating to the Account and Settings menu, clicking on Expenses, and turning on the feature labeled Make Expenses and Items Billable. Right below that, we activate a second feature to track those expenses and items by customer. If these specific toggles remain off, any automated API calls we make later to assign a consultant bill to a specific client project will be rejected by QuickBooks. With the accounting rules set, we move to the Python environment. We import the Anthropic library to access the Claude AI model, and the Requests library, which handles the secure HTTP connections to the QuickBooks API. We authenticate our script and verify the connection by pulling a list of all active projects directly from the QuickBooks database. Properly configuring those strict accounting constraints is the mandatory foundation. Only then can we introduce fluid AI logic to read the incoming invoices. We use Claude's Vision API to handle the data extraction phase. When a consultant emails a PDF invoice, our script converts the first page into an image and passes it to Claude. We give Claude a specific prompt, instructing it to extract the vendor name, the exact invoice number, and the total amount due. The most complex step is extracting the project reference. Consultants rarely use the exact internal project numbers assigned by the architecture firm, so Claude must interpret unstructured text like a building name or a street address. The script takes that extracted project reference and cross-references it against the active QuickBooks project list we pulled earlier, finding the exact database ID for that specific job. Next, the script sends an API command to QuickBooks to create the initial bill. It maps the total amount specifically to the appropriate consultant fees expense account. The final automation step happens simultaneously. The script makes a secondary API call to draft the client rebilling invoice. Here, the script applies mathematical logic. It takes the base consultant cost and calculates the dynamic 10% coordination markup, creating a distinct second line item on the client's invoice. This pipeline takes unstructured, risky email attachments and turns them into perfectly categorized, mathematically accurate accounting objects, requiring zero human data entry. To see this in action, we will execute the completed Python script on that $12,500 MEP invoice for the Riverside project. Immediately in the terminal, the output shows Claude reading the PDF, successfully extracting the $12,500 total and identifying the vendor data. A success message appears as the script maps the text Riverside Office to the exact internal ID, Project 2401, navigating the naming variation perfectly. The terminal output then confirms the simultaneous creation of both the bill and the client invoice. When we switch over to the accounting software, the results are there. A newly generated $12,500 bill sits perfectly categorized under the MEP engineering vendor profile. Looking at the drafted client invoice, we see two separate line items, the $12,500 pass-through cost and the distinct $1,250 consultant coordination fee. What used to take 20 minutes of manual data entry, error checking, and forgotten markup calculations now takes about 2 seconds of automated script execution. Automating cost pass-throughs eliminates an administrative bottleneck, permanently seals a critical revenue leak, and directly protects a firm's net profit margin.